Hey, what's up, all of you beautiful subscribers? Welcome back to the Chapple Show. So should you start investing in the stock market today? We're going to talk about that along with an article that gave you some insight into Elon Musk's mindset and the mind of an entrepreneur, along with our stock market winners and losers. I just want to say also that I'm very sick today. I'm going to see the doctor in a few hours, so I'm going to get through this without trying to cough up a lung or sound too terrible. So let's just start with this article came out here about a third of millennials think now is the time to jump into the market. So this is a little bit of a misleading headline, but it kind of gave me an idea of what to talk about here, although I did highlight a point here. So from the headline, it would have just assumed that, people aged, 20 to 35, they think that now is the perfect time to jump into the market. Meanwhile, once you get into it here, this is why you got to read articles before just, clicking on the headline. Establishing new positions was the most popular move millennials plan to make, but only by a hair. Nearly the same percentage, 30% compared with 31% said they would make no changes to their portfolio, while 25% said they planned to change the allocations within their portfolio. So what this means is that 1/3 of millennials are still investing in the market or are trying to buy new positions. It doesn't mean that now's the time to jump in, now's the perfect time. It just means that 1/3 of millennials are saying that they're going to keep buying, which is, to be honest, that's what I'm doing right now. Because here's the deal. Should you invest in the stock market today? And here's my opinion on this. If you are trying to buy the hot stocks and the hot tech stocks and trying to have it go up, 5% in a month and trying to gain 30% returns on certain stocks and options and calls and shorts, then I would say no. Now is not a good time at all. If you're going to do that and just want some quick money in the next 6 months, 1 year, 2 years, now is not the good time to do that. However, what I do think is I have the saying where the best time to invest in the stock market is always today, regardless of when you invest in it. That is only if you are planning for investing in the long term. So if you're like me and your investment plan is 10 plus years, whenever I make an investment, I'm planning on holding on to those stocks for at least 10 years. That's always my strategy here. And statistically speaking, actually, regardless of where we are in the economic cycle, where we are in the stock market cycle, as you guys know, roughly every 10 years, there's never been a period of time where the stock market has gone 10 years without some sort of crash or recession or bubble that's bursted. So we're in year 9 right now. So by the end of next year, there should be something, right? And why is there a bunch of comments here? Why are they all commenting here? We'll just close that off there. So what I'm trying to say here is that regardless of where you are in the cycle, whether you invest right before the crash or right at the bottom of the crash, if you hold on to those stocks for decades, odds are, if you're investing in safe companies, not like the hot tech stocks like at the top of the dot-com bubble, if you're just holding on to those stocks and they're blue chips or they're some can be tech stocks, some are bank stocks, some are high dividend stocks, utility stocks, whatever, then today's the best day, regardless of where you are in the economic cycle, because you're still going to have really good returns over a decade. That's usually what happens. Like if you were to buy at the peak of the 2008 stock market crash and recession, and you bought companies that, were safe like a McDonald's, Walmart, or whatever, you would have still had, 50% returns by now or more for the most part. So which equates to what, roughly 6% per year, which is plus dividends, so probably 9 to 10%. So what I'm trying to say here is today is always the perfect day to start investing in the stock market if you are smart about it. If you are not smart about it, then obviously it's not a good time. If you're just going to go for the hot tech stocks, like people investing in the Snapchats and the Twitters and all the tech companies that don't make money, that are still overvalued, then you're not going to do well. You're going to lose a lot of money. So I just thought I'd mention that today. So this article made me think of it. So we're going to move on to something, an Elon Musk article, and I thought it was really important to talk about. Usually I separate my entrepreneurship videos from my stock market videos, but today I'm really sick and I'm just gonna put them together here. And so this was a really cool article because what it pretty much said was it followed a few of Elon Musk's tweets here, and I think that they're really important to talk about. So he said here that he was answering questions on Twitter. So this guy said, Eric Dipavine, he said, following Elon Musk on Instagram shows an amazing life. I wonder if the ups and downs he had make for a more enjoyable life. And then Elon Musk tweeted back saying, the reality is great highs, terrible lows, and unrelenting stress. I don't think that people want to hear about the last two. And that's, I mean, that's typically what it is in entrepreneurship, guys. It's, I try to share with you the ups and downs. I've been there's a lot more ups for me right now because I'm not running $3 billion companies like Musk is right now. But I try and share with you guys the ups and downs, and I try to warn you about them too. Like, you're going to be by yourself a lot. There's going to be days where you don't make any money. There's going to be days where you lose money. And it's really important to talk about the ups and downs because actually, you know what? I think for most people, there's probably more downs than there is ups. I mean, most of the journey is trying to climb up the mountain. And usually when you're trying to climb up the mountain, you spend, usually what happens here is when you're trying to climb the entrepreneurship mountain, it's, you usually have like a plateau or a long, steady decline with like a sharp incline after you do some sort of good decision or sales pickup one day. And then you have a sharp incline and then it's kind of steady and then down and then it's another sharp incline. That's generally what happens during business. And so most of the time you spend when you're trying to, build a business is actually, it's stressful. I mean, your company's not growing on a daily basis as at the same rate that you think it would. So although that's only some cases, I guess it depends on what kind of company you are. For me, that's what it's like. It's like you get a spike, and then you kind of plateau, which is stressful. When you're not growing, it sucks. Then you get a spike, and then you plateau. That's what it's been like for me. So he answered a few more questions here. Robert Gall tweeted at him saying, respectfully, I bet a lot of fellow founders would love to hear about the lows and the stress and how you've dealt with them. Elon Musk tweeted back, I'm sure there are better answers than what I do, which is just take the pain and make sure you really care about what you're doing. And so Elon Musk says, like, look, I don't have any solutions for the stress. I just take it and move on. I mean, I guess that is a solution. That's what a lot of people do. And so another thing here is that someone asked him, someone asked him, are you bipolar or something like that? So Sunday on Twitter, Musk was also asked if he was bipolar. Musk said, yeah, maybe not medically though. I don't know. Bad feelings correlate to bad events. So maybe real problem is getting carried away in what I sign up for. If you buy a ticket to hell, it isn't fair to blame hell. That's actually a good quote. If you buy a ticket to hell, it isn't fair to blame hell. I think that's a little bit of a dark, perspective on entrepreneurship for the most part here. I mean, when you're signing up to be an entrepreneur, you're signing up for a lot more freedom, but a lot more stress. And that's generally, what you're signing up for. You're signing up for something where you get motivated to go to work every day, but it's stressful a lot of the times. It is. I mean, sure, it's going to be fun. Sometimes you're going to have lots of freedom, but it's going to be stressful most of the time. And that's what you're signing up for. And I think that Elon Musk kind of has a dark view of entrepreneurship because think about this, what happened to him. I mean, he was pretty much bankrupt. He was down to his last $1 million that he invested in SpaceX in 2008. And he said, like, I think he had 2 rocket failures, and he said, like, if the third one fails, the company shuts down. I'm not going to have any money left. We're not going to be able to get space contracts, and Tesla might go belly up too. And so what happened? The rocket did well, and eventually that was able to get him more funding. And again, 6 years later, 9 years later, he's worth $16 billion. So anyways, that's some perspective on Elon Musk. He's had probably more ups and downs than most entrepreneurs here that I've seen. So anyways, hopefully he's okay. He's not too bipolar, and because we need him to be alive for another 20 years so that he can get us to space. He can get us to mine some asteroids and put humans on Mars. So we need him to be healthy. Hopefully his heart's healthy and all that stuff. He almost died from like malaria too or something. Did you hear that? Or is that Jeff Bezos? Elon Musk almost died from something. I remember that. He was like passing in and out of he was going in and out of consciousness and stuff. I read his book. It's really fascinating. So anyways, we're going to move on here to our stock market winners and losers. This is going to be a quick video. My voice is kind of giving out on me right now, and I'm really not feeling well. So we're going to move on to one of the winners today, which is Under Armour. Couldn't find out why, but Under Armour's up 4.5%. I'm guessing they had some sort of good earnings reports. I couldn't find any. I mean, we can check news articles here. Usually there's at least one article, but there's absolutely nothing today. So I guess people are just betting on Under Armour. I don't know. I could check their earnings report, but I don't want to do that live during the video here if it came out. I want to talk about another winner here, which is, I believe, Costco. Costco up 2.97% here. Let's see here. One put, one call option. Again, I haven't really looked into this. I'm really sick today. I'm sorry. I haven't put into too much research into these videos today. I'm just not doing too well. So Costco's up 2.97%. I'm guessing that an earnings report come out today or something, or some sort of stock market estimate for their earnings report, and so they're up 2.7% today. There are companies only valued at $69 billion, eh? Tesla's valued more than Costco. How weird is that? All right, so our stock market losers, I got to mention Amazon's had a really rough few days here while I've been gone. They were at a peak of $1,081 per stock, and they've dropped 8% since then. I guess since the earnings report came out. I don't know if I talked about that or not. So they've they've dropped $100 off their stock, almost 9%. So again, I think that this is a blip. I actually know what. Here's my opinion on Amazon. Actually, that in the long run, as I've said before, they're going to be a good company going into the future. I'm going to try and take some of their market share in the next few months. We'll see what happens with that, with the e-commerce marketplace. They're going to be a great company going into the future. However, I wouldn't put it past the stock to drop significantly off a cliff here, because look at their PE ratio. Their PE ratio is currently 250, which is probably the highest amongst the highest of all stocks in the market right now. So I wouldn't be surprised if that falls off the cliff a little bit here. So Amazon, they were stock market loser. Snapchat, they had a stock market they had a stock freeze, I believe, while I was gone the past week. And so they allowed investors to start selling off the stock again. So they were down 3%, but now as of the last, I guess 20 minutes here, they're only down 1% today. So they were big losers today. Now I guess people are buying into them. So let's see how they've done today. Again, they've been fairly up and down, but again, just looking at the stock here, I mean, after their IPO day on March 2nd, on March 3rd, their stock was $27 a share. Currently at 13, they're down pretty much 50%, which is, again, this is not good. We're going to see what happens here. There's some articles came out saying like maybe they can revive. The Snapchat suffers a stock apocalypse as early investors are allowed to sell. Yeah, I don't know. I was watching Shark Tank recently, and what I've come to realize is that, when you're running a company, or when you're investing in a company, I'd much rather bet on the jockey than the horse. And I think that Gary Vaynerchuk actually says that too. He said that about Casey Neistat, investing in Beam. Betting on the jockey and not the horse, meaning that you're betting on the people who are running the company to make it succeed. And I don't know enough about Evan Spiegel, but it's something that I've been thinking about too. I think that I have to start thinking about for myself, in the future, if I'm going to get investments for my, e-commerce company. But that would be long down the road, by the way, long down the road. I think that I'd be a good jockey to bet on if everything goes well, because I want everything to work well, and I'm going to do what I can to try and learn every skill possible. And so whenever I try to invest in a company now, whenever I'm looking at companies now, especially over the past few weeks, like I'm trying to look at who runs the company. Are they making good decisions? Which is one of the reasons why, say what you will about Steve Jobs being an asshole. I mean, he was an innovator, guys. He was an innovator. He didn't make the products, right? He wasn't doing any of the coding in the last 10 years, but he was, he knew what the next step was for the company. Always. He knew the iPod, the iTouch, iPhone, all of which were super successful. iTunes. He knew how to run a company. I would bet on him to, although technically, I guess in the late 80s, I mean, his company failed, that Cube company or whatever that company he was starting. But I would bet on someone like Steve Jobs here, if he was still alive. But, what do you guys think about that? Seriously, leave a comment down below. Would you rather bet on a good product or a good service or a good business, or would you rather bet on the people running it? Now, there's obviously a balance, right? There's obviously a balance. Maybe I'll make a full video on this, so I won't get into this too much here. But there's always some sort of balance. You need at least some sort of viable product, and you need some sort of competent people running the company. We're gonna, I'll make a separate video on that when I'm feeling a little bit better, because that's a good thing to talk about. Would you rather bet on the jockey or the horse? So the last one I want to talk about here in terms of stocks is the Discovery Channel. So they announced that they're officially taking over the Scripps network, which is like HGTV, TLC. I promised I'd or was it TLC? I don't know. It's like HGTV, Food Network, Shopping Channel. And so I promised to update you guys on that. Apparently, investors didn't like the takeover for the value that they, or for the money that they're paying out. I clicked on this article here. It's apparently 14.6 billion, including debt here. And so apparently people aren't liking that. The stock dropped off 8.7% as of this very second here. And wow, whoa, what happened to them, eh? Whoa, I didn't do Discovery. I guess that they had bad earnings or something, where they, in 2014, from August 2014 to January 9th, 2015, they were down 61%. Fascinating. They only went public in 2005, eh? I thought they were around longer than that. Anyways, I think that's going to wrap this video up. Sorry I'm not, super enthusiastic and all that stuff today and did do too much research. I'm really not feeling well, and I wasn't planning on making a video today. So I toughed this one out. Hopefully you guys still enjoyed it. And I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.